Alright everyone, Cowboy Trades here. Welcome back to the channel. Let's talk about KDA. It's been a long time coming. We're currently trading at 93 cents after finally hitting our $1 price target that we have been talking about on this channel for the past 5 to 6 months. Where is KDA heading down to in the immediate short term? Is it time to start thinking about DCAing? Where am I going to be starting to get open interest in the markets? And where am I going to start buying? Let's talk about all this and more. Now, right off the back, our first targets. As you can see, this head and shoulders pattern is in the breakdown like we talked about. We had a reversion to the mean on the EMA ribbons. I'm going to talk about that in a separate chart in a second. But like we said, this zone down here where there's volume profiles that we will also talk about in a sec, down at 70 cents. You know, we've got this head and shoulders price target down here at 84 cents. This was the magnet zone. The last time we made an update on KDA was 2 weeks ago, so we were round about this, you know, $1.45 level, and we really started dropping to the downside ever since. So what happened? Well, once again, like we highlighted in the previous video, we were completing that reversion to the mean. Now, I actually talked about a trade that we could get the opportunity to enter if we do have a reversion to the mean. I talked about in my last video how these markets were very, very boring. They were getting slow, choppy, and I basically said, you know, if you're shorting or longing KDA, you have to be very careful about what zone you enter because these markets right now are so slow. I mean, let's look at, you know, the lows we established back in May. We were basically trading, you know, holding these lows for about 182 days, and there weren't too many opportunities, but we did state the opportunity if we did have another reversion to the mean. I talked about my trade from 135 up to 140. I would be entering a 10x leverage short. Check out my last video. I hope you did get into that. I posted this over on Twitter after confirming that my shorts had got triggered at 135 and 140. If you watched the video, you knew the take profit was all the way down at $1. So congratulations if you did get into that trade. The most high trade up from, you know, the 140 level coming down to this $1 region was about a 28% drop on a 10x leverage. That was a 2.8x return. We just pocketed from sitting on the sidelines and being very patient about waiting for these next lows to come down for Kadena, and we're finally here. So what's the next move? Well, we've completed a reversion to the mean. At this moment in time, the EMA ribbons are starting to widen, and typically we're not actually, well, let me say this first. We're not at the widest that the EMA ribbons can be. Now, you can typically see when the EMA ribbons are completely wide like this is normally when a bottom is formed, because it makes sense. You know, there's, you know, this is, you know, the heart line of volatility, and you can get very volatile to the upside of this, and you can get very volatile to the downside of this. And once the EMA ribbons start widening, you know, obviously you're miles away from the price action, which is why the short-term moving average is running away from the long-term moving average. So when these start to widen, you're often just getting ready for a brutal breakdown. I mean, the only two periods I can see is right here, round about this 180 range, and then the EMA ribbons were kind of tight here before becoming looser at approximately, you know, $4.30 if you want to be conservative, round about $3.50 or so. But nonetheless, the reversion to the mean is complete. We've hit the take profit on the trade. I currently don't recommend entering a short position at this moment in time. Could you make a ton of profit? You could, but it's extremely risky. As always on this trade, you know, I'm an objective bear. I may be bearish and think we're going down to lower price targets, but one thing I'm not is a late bear. I told you to short from a position of strength up at 140 and 135. When price action comes down to the downside, this is the time where we're sitting on the sidelines and we're actually hoping for that next bounce back up to the EMA ribbon so we can have another trade. If we come up to, you know, 110, 120, I may post another video talking about the next trade, but right now I'm really going to be focusing on where is the levels that I'm actually going to be picking up interest in KDA. So we've completed a reversion to the mean. It looks like the breakdown is coming. You can also see, if we look down here at the MFI, the money flow index, this is basically the RSI, but also takes into consideration the volume, and subsequently we don't really need to focus too much on the volume candles down here. You can see volume overextension over on the 8th, volume overextension on the 5th, volume overextension on the 5th as well, a month later. Very interesting. And as you can see, a lot of the time these correlate to a reversion to the mean, and you know, we've only just broken beneath the heart line. You can also see there is a little support floor building up around about 24 for the money flow index, but we're currently at 44, 45 after just kind of falling beneath this level. So I do think the mean volume trend line or the mean volume is probably going to come down to this lower bound trend line around about 24. Could it bounce from there? It is definitely a possibility. I think we're a ways away from establishing the lows. More about where I think the lows are coming in a second. Now, we've navigated this market and been very patient just by using very simple metrics like trend lines. If we don't break out this trend line, there's no reason to be bullish. If we don't have a successful breakout above a set of EMA ribbons or a moving average, there's no reason to be bullish. If we don't have a breakout above the MFI, there's no reason to be bullish. We've been sticking with these very simple metrics. It doesn't need to be 100 charts, 100 moving averages, looking at all these in-depth things. A lot of the time, if it's screaming blatantly obvious at your face, it is what it is. Over on the Heikin Ashis as well, these are something that can help people, take away the noise. For example, if you come over to the Japanese candlesticks, you can see a lot of the time, if you are trading, depending on whether the markets are green or red at that week, you might be like, oh, it's bullish, oh, it's bearish, oh, it's bullish, oh, it's bearish, it's bullish, it's bearish. Come over to the Heikin Ashi candles, take out the noise. These small pumps, these small dumps, they're not overly registered in the Heikin Ashi, so you can get a really good idea of this is the trend at this moment in time. This is the trend at this moment in time. And as we've been talking about, for the last 5 or 6 months, we've been telling you we are hugging this range. Momentum is coming down. EMA ribbons, if we come over to the daily, it's a little bit hard to see as well. EMA ribbons were pushing us to the downside on the weekly time frame. They haven't loaded in, but you can see they are coming down very brutally. Volume was there was tons of bearish volume. Bears were in control of the markets. And in terms of the Heikin Ashi candles, it was a very smooth and slow descent. A lot of people asked me, over the past 5 months or so, every time we have maybe like a 10-20% pump up to $2, they'd be like, are you still bearish? Up to 150, up to 170, you still bearish? Up to 150, you still bearish? But once again, if you're asking these questions, come over to the Heikin Ashi candles. It really smoothens out the trend, and it can help take away some of these dead cat bounces. But nonetheless, Heikin Ashis are drastically heading to the downside on the weekly and the daily, with volume confirming the breakdown. EMA ribbons are getting pinged down. So we know the direction of the trend. Let's confirm it. Let's head over to the oscillators. Since we've broken to the downside, you may be thinking, we were at 150 the other day, and now it's down at 93, right? So there's no way we can really keep on pushing down further. This is where I would disagree. Now, we just talked about the money flow index on the daily, so I won't talk about this too much. I wanted to show this on the weekly in a second, so that's why that is there. On the squeeze momentum indicator, you can actually see we've only just started a very minor, downtrend. Obviously, it's moved down pretty sharply. Bears are clearly in control of this. But what I do want to highlight is, look at these. These are major capitulations. This is a major capitulation. You can see how far I have to zoom out to show you how bearish things can get. This is us down here. Once again, this is the point I'm trying to make. This little downtrend that we're sitting in right now, this might end up engulfing and turning into something like this if the markets really do get bearish. Now, I've been talking about on the channel quite often. In fact, I made a video 6 months ago talking about how to, get your cryptocurrency off exchanges. If these exchanges start going bust, they're not going to give you their money back. There's going to be exchange runs. The whole FTX drama, it's bleeding into BlockFi. I do believe quite a few exchanges are going to go bust. There's going to be a liquidity crunch. These are all things I've been talking about for the past year. They're finally coming into fruition. You need to be very, very careful, because while I wish I could come and say KDA is at $1, now's the time to buy 100x, I'd be lying. I don't think so. I think we've got lower to go. I'll show you my price targets in a second, but MACD is heading down very strongly. When was the last time that we crossed beneath this range over on the MACD and really started tipping into bearish territory? We were over on here in April. This was capitulation territory. This is a capitulation. So I think what we're experiencing right now, you can see it in the money flow, you can see it in a lot of oscillators, but there's going to be a lot more room for the trend to move to the downside. Now, money flow index on the weekly time frame, you can see in the past week we only just came up and got rejected. We're turning down quite sharply at 34. The last time we turned down, we went down to 6. So we can really start picking up the pace here. Once again, you can see wow, yeah, squeeze momentum indicator, weekly time frame. This is what I wanted to highlight. It hasn't even started to recognize that on the higher time frames we've started to break bearish, because we've been boringly chopping and holding this range for, once again, how long was it? 182 days, 189 approximately. We've been in this range for a very long period in time, and we've only just started breaking down. Volume's only just started topping out. Some of these higher time frame indicators like the MACD, squeeze momentum indicator, haven't crossed bearish yet. The daily time frame ones are saying, we're crossing bearish, but something like this could soon ensue. So in terms of the oscillators, these kind of confirm what we just talked about, and the fact that we should be breaking down further to the downside. Let's talk about the volume profiles. Now, the volume profiles got us this far. We were previously trading around about this 140, 150 range, and once we started breaking beneath this range, we told you to be very, very careful because there was a lack of volume traded at these previous ranges. You can see, there was like 1, 2, 3, 4, 5, 6 data candles actually. This one over here was underneath. This one under here was underneath this short cluster right here. So technically, 5 or 6 weeks worth of data traded over here, and you probably had maybe 3 or 4 weeks worth of data traded over here. So as you can see, it's a very straight line up, very straight line down. We didn't really establish previous support and resistance. So we told you, once you start losing these volume profiles, you're going to start seeing monumental slides to the downside, and that is what we're finally starting to see. Now, let's drag out these volume profiles because as you can see, the next major cluster to the downside is this volume cluster over here. There was a decent amount of bid asks. There was a good book depth over at that range in terms of a lot of buys, good amount of sells as well. So I do think the next price target to keep your eyes on in the immediate short term is 88 cents. I do believe the head and shoulders is around about 84 cents. So you can see some confluence just above that 80 cent level. So start of this range is coming down at 88. If we drag the next range out, you can see we've got an even stronger case for an even stronger support level right here. This is going to be coming in at around about 70 cent. It says 69.97. So basically, yeah, round it up 70 cent. I do think 70 cent is the area that everyone should have their eyes on in the immediate short term. Yes, I did just highlight that there is a level down here, about 14% drop, but if the markets start opening bearish on Monday, for the rest of the week, stock market starts coming down, more bearish news starts coming out, exchanges start halting withdrawals, it can get a lot uglier. So the next price target I've got my eyes on in the immediate short term, before I think any type of strong bounce is going to happen, is round about this 70 cent range. Now, I do think you should be careful round about these ranges. Once again, like I said, I told you to short from position of strength. There's absolutely no way I'm going to be telling you to short after the price has dropped after the price has dropped 25% in a week. Once again, I may be a bear, but I'm a conservative bear, and I look at these trades objectively. There's no way I would be rushing in and shorting after we've already been rugged to these lower levels. I'm much more interested in looking at areas where I'm interested to buy now. We've been making money shorting this entire way down. I'm gonna try. It's a little bit hard because I'm so used to this bearish mindset right now, but being as objective as possible, I obviously have to look at these markets objectively. And right now, we've made money shorting. Now is the time to start focusing on DCAing. So I do think it makes sense to start getting more bullish as we do come down to these lower ranges. Over on the volume profiles, next area of major support. This is actually, let me delete these other two areas because I want you to realize this is the first price target I'm actually going to have open interest in the market, around about 51 cent. Right now, I really wouldn't consider buying or touching until we do come down to at least 50 cent. And even then, nothing's written in stone. I will let you know as soon as I start buying. I'll let you know on the day. Yeah, so don't worry about missing when I'm going to buy. I will let you know, but for right now, open interest for me starts to kick in round about 51 cent. You've got a huge volume profile just beneath that, kicking in at round about 31.6 cent. Point of control all the way down here. The most amount of buy and sell orders, the highest level of book depth in the volume profiles are down here at 22 cent. Once again, we take this one step at a time. In the immediate short term, I am calling for us to come down to 70 cent. After then, we'll reestablish the markets. If we have a bounce, then it's going to be a great opportunity to short from another position of strength. Once again, I won't tell you to short here. If we have a big bounce up to the EMA ribbons, I'll be like, hey, this is where I'm considering shorting until we come down to that next level. So around about 70 cent first price target, but where I've really got my eyes on is 50 cent. Most amount of volume traded is between the ranges of 31 cent down to 13, and point of control 22 cent right on the head. So let's move on from this. Now let's look at KDA versus Bitcoin, because right now you can see KDA versus Bitcoin actually hasn't broken the lows. So Kadena, in my opinion, has further to go to the downside. Now once we take out this one region where we established the lows back on the 9th of May, you can see the 1.236, not even the 1.618, just the most conservative fib that we've got running from right now is about another 31% drop to the downside. Now, I'm not going to run into the reasons why I think Bitcoin's going to 14K. I've talked about it in many other videos, and I'm sure, I don't want to reiterate any information that I've talked about in previous videos. So as you can see here, I think Kadena has about another 31% to drop against Bitcoin. I think Bitcoin has about another 70% to drop. So if we add these two together, I would be instigating, or I would be thinking that Kadena probably has about another 48% to drop to the downside. If we come over to KDA, how far away is a 48% drop? You can see it is right down here. This is where the KDA BTC 1.618 fib is. If Bitcoin breaks down, that 13%, and KDA breaks down 31% approximately against Bitcoin, we should be finding ourselves around about this 48-cent range, which, like I said, is where my open interest starts to kick in the markets. Now, in terms of all the price targets to keep your eyes on in the immediate short term, once again, Head and Shoulders is down here at 85 cent. That is technically, the next level that we could potentially bounce from. I do think the markets are pretty bearish right now. Obviously, do take into consideration news is what is ruling these markets right now, not even TA. I'm sure you've all seen, FTX has gone bankrupt. Binance came out and said they buy it. Then they said they're going to back out of the deal. Then Binance pauses FTX token deposits. There's some weird stuff going on with crypto.com sending 400 million in ETH to the wrong addresses. I believe the SEC is looking into SBF. And then also, FTX own 9 billion in liabilities while they only hold 1 billion in assets. So that is a very poor reserve ratio, 1 to 9. No wonder they went bankrupt. So there's tons of bearish news in the markets. And I don't know if you remember, but when Luna went bankrupt, there was about 5 exchanges that went bankrupt underneath it within the next week or so. Since then, we've seen, or let me specify, since the whole FTX FUD, we've seen BlockFi pause withdrawals, and yeah, this could be one of these signs that this could start spiraling out. So once again, do bear in mind, news is ruling these markets. If we get bullish news come out, we might bounce on the Head and Shoulders price target at 84. If we get bullish news, we might bounce at the 70-cent price target where the volume profiles come in. If we get news in the next week that more exchanges are going bankrupt, like maybe we have 1, 2, 3 exchanges within the next week or so go bankrupt, we could start rocketing down to 50 cent very quickly, which is, once again, about 48% drop from right now. Now, where would I be really interested in buying? I told you it makes sense that my open interest starts to spike around 50 cent, but if I'm honest, I wouldn't particularly feel too comfortable buying until we come down to this area where there's the largest bid and ask book depth. So this starts coming in at 31 cent, your point of control is down here at 22 cent, and then you've got the lows of the book depth around about 20 cent. I would be pretty happy to start nibbling and DCAing KDA round about these ranges. Bear in mind, I have not set any buy price targets yet. I'm very patient, and one thing I'd like to really emphasize is something that I've mentioned many times on this channel. I am not here pretending like I'm able to call the exact bottom. I've mentioned this many times. No one knows when the exact bottom is. No one knows when we're going to bottom. We're all just making estimates based on the information that we've got. So what I would like to say is I flow with the trend. We've been looking at these reversions to the mean. Every time we come back into, the mean price, mean volume trend line, we continue to break down to the downside because of, bearish liquidity conditions just can't hold up the price anymore. I'm more than happy to sit on the sidelines and be patient. Like, once again, I don't know, I know a bunch of OGs watch my KDA videos. People like Indian Kitchen, been here since I was covering this at $6.57, and I've been telling you since these price targets, I'm very patient. I'm happy to sit on the sidelines, and I've said this, I would rather miss out on the first 25-30% rally. I'd rather the Fed comes out at a meeting and says, we're switching bullish now's the time to pivot, markets start to pivot, I get caught with my pants down and I miss the first 25% rally. I would much rather miss out on the first 25% rally than, DCA at this level and 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 DCA at this level. Once again, I'm not trying to catch the exact bottom. I'm trying to buy from when I think the markets are going to start picking up heat, which means I'm not trying to catch a falling knife. So take that into consideration. If the Fed pivots tomorrow and we start rallying, 30% overnight, that would be back up to 120. 4, 5, 6 months ago, when I was saying that we're going to come anywhere near $1, people were calling me a fodder. They were calling me a hater. They said I was unbiased. They said, how much did I get paid to spill negative information on KDA? People said, I don't like your videos because you're not objective. You're trying to fill your own bags. All of this different nonsense. But I've just been looking at the market subjectively, telling you how it is. And once again, if we have a 30% rally tomorrow, you can buy at $1.20. That is literally the absolute lows like a month ago. So sitting on the sidelines definitely can be a blessing. I always do say this. I'm not trying to catch a falling knife. I'm going to wait until there's pivots in liquidity conditions, things change in the stock market, things change in the cryptocurrency markets. Something needs to change, and that hasn't happened yet. So until that happens, we'll be taking it level by level, 85 cent, 70 cent, 50 cent, down to 30 cent and 22 cent. These are the major levels that I've got my eyes on. That is all I've got for you today, Cowboys. Make sure to come and follow me over on Twitter. Like I said, I can't always post a new video just to confirm I have entered the trade which I said I would enter in the video in the first place. So if you do want to keep up to date with my trades and more information, be sure to come and follow me over on Twitter. It is at 618_cowboy. If you do want extra trades as well, I do post extra trades over in my Discord. If you click on my YouTube, click on about, come down, you can find everything: Twitter, Discord, Instagram, official merch. Also, just a quick disclaimer, be very, very cautious. There are tons of scammers in the comment section recently. Every time my channel seems to have a growth spurt, these scammers come and try and take advantage of that. There's actually more scammers, more fake cowboys in the comment section than there are real responses from myself. So be cautious. I do have a phone number. I'm not going to give you my phone number. I'm not going to say message me on WhatsApp. I'm not going to say message me on Telegram. I've got almost 8,000 people who follow me. I don't want my number out to 8,000 people. So I'm sure you can all use your noggin on that one. Be careful. Stay safe. Cowboy out. See you in the next one, my friends. Like, comment, share it with your friends. Peace.